All right, good evening, everybody, and happy July 5th. Hopefully everybody had a great 4th of July weekend with your family and friends. Hopefully everybody got to take some time off. It was a nice, long weekend, but it's back to business. It's back to work. A lot to talk about on the stream. You know, this week is going to be an extremely busy week, not only for some economic news and economic data we're getting out. We are going to hear, obviously, tomorrow from the Federal Reserve. So the FOMC meeting will release their minutes from the mid-June monetary policy meeting. That is tomorrow at 2 p.m. Now, keep in mind that the Fed funds rate is now at 1.5 to 1.75% after that 75 basis point rate hike, which was the largest rate hike since 1994. So at the last Fed meeting, Fed Chair Jerome Powell decided to raise interest rates 75 basis points, the largest rate hike since 1994, so since before I was born. Now, obviously, there's a lot of talk on the street. A lot of economists are going back and forth. Are we going to have a recession? Are we not? We're going to find out that answer on July 28th. Now, even though that's when we get the official GDP numbers out on July 28th, that means, so let's say if GDP has a negative print and we get 2 consecutive quarters of contraction in the economy, that is technically a recession, but that would signal that we've already been in the recession. It's just that this type of economic data is confirming what we've already known. Now, I was reading an interesting article in the Wall Street Journal this weekend that was comparing different recessionary times to what we're going through now. And I think the thing that stood out to me the most was the level of employment or the employment activity when we talk about, you know, not only the labor force participation rate, but the jobs numbers, right? And right now in America, there are more open positions or more open jobs than people actually looking for work. So tomorrow, in addition to the Fed meeting, the Bureau of Labor Statistics will release their labor turnover and job opening report. 11.2 million job openings were in May. That's about 200,000 jobs less than in April. We're also going to be talking about China. Okay, so we haven't talked about China in a while, but I'm going to tell you why I want to talk about China for about 30 minutes, maybe a little bit more, maybe a little bit less tonight on the stream, is because as we've been talking about on the streams, on the shows, on Walks on Wall Street, and in the Behind the Street newsletter, over the past couple of months, as the market has been in this correction/bear market phase, we always like to look at relative strength, okay? So not only relative strength in terms of leading stocks, but also in leading markets. That could be emerging markets, that could be the US equity market. And as of right now, whether we like it or not, the Chinese equity market by far is showing extreme relative strength. And we've talked about this before, the reasons why I'm a little bit skeptical of investing in China and buying Chinese equities, mainly because they do not, or their companies do not live up to the same accounting principles as we do here in the United States, in accordance with the SEC, right? And I think the main, I guess in sort of recent history, we could talk about one of the main examples of this was the Luckin Coffee IPO. Now, Luckin Coffee, I believe, went out of business or was delisted. I kind of stopped paying attention to it, but the company was reporting absolutely monstrous quarters in terms of their revenue growth and their earnings. But it turns out after an audit of their financial reporting, all of those financials were extremely, extremely inflated. But as we've been talking about the PMI numbers in the United States, which are the numbers that are released from the Institute of Supply Management. Obviously, any reading over 50 signals growth in the manufacturing sector of the US economy. I want to then contrast that and look at the PMIs that are coming out of China. So as we know that even though the United States is signaling growth in the manufacturing sector, we are seeing slight deceleration. You know, over the past couple months, we've had readings of 58, then 56, and most recently a 54 reading, which even though that is signaling growth in the manufacturing sector of the US economy, we're seeing extreme deceleration. And it's probably wouldn't be surprised if we start to see a print under 50 in the PMIs here in the United States pretty soon. But as we move throughout this stream tonight, I want to talk about what's going on in China. So the China General Services PMI, it surged to about 54.5 in June from the 41.4 reading in May. Okay, that is the highest reading since July of 2021, beating estimates, totally scorching the analyst estimates here. Many economists were estimating a print of about 49.6. So we're seeing this divergence here as the U.S. manufacturing sector is starting to roll over here. We're actually starting to see a bottom in China. Now, this is just going up based upon the data that we're seeing here as we're standing outside of the Seagram building. But the reason why I wanted to bring it up is because as we look at a lot of these major Chinese stocks, especially Alibaba, Tencent, JD, we're starting to see extreme relative strength here, and the Chinese stocks are leading the market. But guys, let's check who we have in the chat. We're standing outside of my favorite building, the Seagram building tonight. We have Mr. Ming is here. Says, what's up, Tom? Good to see you, Mr. Ming. We have the one and only ABX girl from the Bronx. Hope you had a good 4th of July, ABX girl. We have Sally is here. Says, hey, Tom. Good to see you. Leonardo says, hello, Tom. Welcome, Leonardo. Always a pleasure to have you. Thais says, hola. Good to see you. Otto says, hi, Tom. Welcome, Otto. Hopefully you had a great weekend. Hopefully you had a great one. I see Ruby Falcone. Hey, Ruby, good to see you. Happy 4th of July weekend. Hope you had a good one. Tucson is here, says hello, Tom. Lila is here, says hey, Tom, everybody. Good to see you, Lila. Lee says good evening, Tom. Good to see you, Lee. Good evening to you. Dutchman is here. Slara 305 says hello, everybody from North Carolina. It is raining here also. Yeah, I mean, you know, we got really, really lucky here in New York. It's been about probably 12 straight days without any rain. The 4th of July holiday, the extended weekend, the weather was absolutely fantastic. A little bit humid, so I think this is much needed rain that we're getting here in New York. But the city looks good. The city is looking good tonight. A little bit humid. It's about 74 degrees out tonight. So a huge, huge heat wave break as of right now. We have the one and only Ethan G is here. Says hello, Tom. Days fly by so quick. It is wild. I agree, my friend. Chad Anthony is here. What's up, Chad? Always a pleasure. Sally is here. Welcome, Sally. Elton Rosa, welcome. NMB 045 says, hey, Tom, happy belated 4th of July. Happy belated Canada Day to you as well, NMB 045. Always a pleasure. Gregory is here. Welcome, Gregory. You know, we're starting the stream outside of my favorite building in Manhattan, right here, 52nd Street, so East 52nd and Park. The Seagram building, absolutely beautiful. Bagels and Walks says, do you have your scaffolding picked out for the rain? I do. I do. You know, it's funny. I think there's probably a lot less scaffolding now as I've been walking through the streets in New York City. Very uncharacteristic, but I definitely can tell that there's a lot less scaffolding. Cindy Foley is here, says, hey, Tom, good to see you, Cindy. Anthony says, hello, Tom, and everybody. JMTS Productions. Welcome. Good to see you. Says, hey, Tom, and everybody. Napa1231 says, hey, Tom. Good to see you. British Gray from the one and only Tampa, Florida. I see Sinjib and Alj and Nakos. Well, hopefully everybody had a good extended weekend. I see Michael Johnson here. Wonder Breads is checking in. Good to see you. Well, I hope everybody had a good, relaxing, extended weekend. You know, I was in the office today. I went back to the office here on Park Avenue, and there was almost nobody here, which leads me to believe that, you know, many people probably used the vacation day to probably take the rest of this week off. Because if you think about it, 4th of July did land on Monday. So obviously the U.S. equity markets and the fixed income markets were closed yesterday for the holiday. Today they were back open. The markets opened deep, deep red today. So across the board, the S&P 500, the Dow Jones Industrial Average, and the NASDAQ were all deep red. But right about, 12 o'clock, I'd say about 12 to 1 o'clock, we started to get a big bid in this market. But usually, historically, if we look back throughout history, the days after the 4th of July tend to be actually quite positive for the market. But, I do just want to let everybody know, just a quick reminder, that usually in the summer months, okay, especially leading up to the 4th of July, a little bit after the 4th of July, all the way into Labor Day, which really signals the end of the summer. Many big, I guess you could call them the composite operators if we're talking about, Richard Wyckoff and, sort of his method. But a lot of the composite operators, which are a lot of the institutional investors, you could talk about a lot of the hedge fund activity that move, multi-millions, if not billions of dollars, or manage a lot of money. A lot of that, those prominent figures on Wall Street, sort of take the time off, right? So usually in the summer, we actually see relatively low volumes in terms of trading activity. So if volume does appear to be less than normal across the major exchanges there, that is quite normal. Usually volume does start to pick up after Labor Day, all the way right up through the Christmas holiday. And that is when we start to talk about the potential for a Santa Claus rally, things like that, window dressing for the fund managers. But we'll talk about the bond market too. So it seems as if over the past couple months, we've had an uncontrolled sell-off in that debt market, which has led stocks lower. But if you guys noticed, check out that 10-year U.S. Treasury yield. What do you guys notice? I think we're now trading below 3% on that 10-year. So yields are coming down here quite a bit. And that leads me to believe that is the reason why we're starting to get a little bit of a relief rally here in a lot of these very beaten down high beta tech stocks. I was watching today, and something very encouraging, and I'm going to write about this a little bit more in the Behind the Street newsletter, is that if you look at a lot of the enterprise software, SaaS companies, software as a service, where they experience extreme revenue growth, but maybe their valuations were a little bit inflated due to the artificially low interest rate environment. Well, if we revisit their valuations now, we have experienced extreme multiple compression. Okay, so what does that mean? So let's say if something was trading at an egregious multiple to earnings and sales, as those asset prices has come down, that will then compress their PE ratios, assuming that they have any earnings, compress their price to sales ratios and the like. And I'm actually seeing some buyable basis here. So I think, and now this isn't an exact science, but I think in some select few names, like a couple of the cybersecurity names like Zscaler, CrowdStrike, Okta, I was looking at. Also, if you want to talk about in the Australian markets, enterprise software company Atlassian, you're starting to see bases form here. So stage one bases, valuations have come down. So as that 10-year treasury yield comes down, I think we're starting to see fund managers start to nibble here and redeploy capital in the software space. So we'll talk about that too. Hey, I see photos from around New York. Good afternoon, good evening, photos from around New York. Hopefully you enjoyed your weekend. I see Michelle K is here. This is good evening, Tom. How are you? I'm doing really good. Michelle. I had a very restful and relaxing weekend. I wish the same for you. I see the one and only Jimmy Anderson, the podcast host of the Beer and Bets podcast. Always a pleasure, Jimmy Anderson, and I hope you had a great 4th of July weekend with your family and friends. The sun is just setting here, which is nice, being that it's almost 9 o'clock and the sun is still out, which is good. If you guys remember all too well in the winter, sun is setting at like 4:50, which is pretty miserable. Steph is here, says, hey, did you see the latest Biden was caught? Hold the cheat sheet note again with simple instructions. I think I did see something like that. I saw some photos floating around on Twitter. On that. Dan Zhang is here, says, hey, Tom. Hey, Dan. Good to see you. We are outside of the Waldorf Astoria in New York, which is undergoing extreme renovations. I'm really excited about the brand new Waldorf Astoria tower that is going to be going up in Miami, actually. And that will be the largest residential tower south of the World Trade Center. So we'll be sure to live stream the construction of that as we make our way down to Miami. Cynthia Beal says, good evening, everybody. Good to see you, Cynthia. Welcome. I see Michelle K. Hey, the one and only Michelle McGraw. Welcome. So Michelle McGraw is our good moderator on the channel. Always a pleasure to see you, Michelle McGraw. King is here. Says, hello, Tom. We missed you live streaming. Are priceless. Well, thank you, King. Appreciate that. You know, very kind of you to say. It took off about, what, 4 days? 4 days streaming. You know, for those of you who are new or maybe just joining the streams, we tend to live stream, I would say, about 5 days a week between New York City and Miami. But obviously last week was not only the end of the month, but it was also the end of the quarter. So Q2 has now concluded. Okay, so if anybody here is in sales, specifically selling into the enterprise, let's say Fortune 500, Fortune 50 companies, let's call it, you know that not only the end of the month is critical, but the end of the quarter is like crazy, right? Because as you start to move up the stack, as I like to call it, and sell into enterprise accounts, your quotas, if you have them, are usually based on the quarter, right? Because if you think about the buying cycle of a large institution, let's say if you're selling into the major investment banks, let's say if you're selling into the major healthcare providers and payers, you know, these sales cycles are going to take a little bit longer as opposed to if you're just selling into a small or medium-sized business, right? So had to take some time off, had to you know, make sure I take care of my customers and things like that. But we should be back on track, our regular scheduled programming 5 nights a week. Corey says, has the rain stopped? You know, Corey, I think it's just stopping now, which is good. You know, I checked the weather app on my phone before I streamed. It says it was supposed to stop at 10:15, so maybe we're getting lucky here. But it was on and off raining pretty much all day today. But I think it was needed because, Corey, we got extremely lucky here in New York. I think it went 11 days without any rain. So it was really nice, beautiful weekend. Hope everybody enjoyed it. Yeah, Nakos has got to love end of the quarter, indeed. Well, I think this is the brand new JP Morgan Chase building that's going up here. You know, a lot of drama coming out of JP Morgan Chase. I think there was a leaked Business Insider article that came out today. I'm not sure how truthful it is, or maybe it's just you know, a slander against JP Morgan Chase. But supposedly a lot of the employees in the investment banking division are extremely upset because they claim, essentially, I mean, let's just shoot it straight. I mean, a lot of companies are pushing everybody to go back to work, but like, I mean, I guess we'll take a poll in the chat. I mean, you want to work remote. So essentially JP Morgan Chase is mandatory, or is making it mandatory that people return back to the office, and they're doing so by tracking your, you know, key card swipes at the door. Right, so supposedly or allegedly, funny enough, here it is. Well, funny enough, if you're not, you know, coming to the office, let's say if it's the 3 days or 4 days a week like you're supposed to, you will get, you know, reprimanded or face some sort of repercussion or something like that. So there's a lot of I guess micromanaging, you could say, is the main complaint. There are allegations that JP Morgan Chase is downloading particular software where they could actually track the amount of hours the employees are logged onto their computers, the amount of times that they are sending emails, typing emails, things like that. So I guess the main criticism is micromanagement, but I think we're going to start to see this big push towards adversity within the workplace because obviously the employees, the vast majority of them, do not want to return to work full time. They probably don't even want to do a hybrid. They probably want to work remotely 100% of the time, which is probably not going to fly, especially if you are working in investment banking or something like that, especially on the sell side or the buy side. Paul Medes is here. Good to see you. Welcome. Rusty Golfer says good evening. Good to see you, Rusty. Shauno is here. Welcome. Yeah, Davi says AKA micromanagement. Yeah, I mean, you know, I don't really know which way I stand on this because I understand the micromanaging piece. So I've always told this story back in the day when I was actually at my previous tech company. I've been in sales my entire life, and I've always been a really, really good salesperson blowing out my quota, right? So my previous manager, essentially the unwritten rule was if you're hitting your quota, we leave you alone, right? So if you're a salesperson, you're hitting your quota and you're exceeding your job responsibilities. If you have a good manager, they'll leave you alone. You could leave the office whenever you want. You could sort of take days off when you're really not supposed to. But ever since we got this new management at the company, even though I was hitting my quota, they wanted to, record my cold calls to customers or prospects through Skype or Zoom. And I just didn't feel comfortable doing that because I think it sounds rather unnatural, right? I mean, if I'm hitting my quota and I'm doing everything right, why should you have to listen in to my calls, or why should you track the amount of emails I'm sending? So I guess micromanagement is a huge issue. It was for me. That's actually what prompted me to leave my previous employer. But we're starting to see this in the investment banking industry because, even we see, major, well, the richest man on earth, Elon Musk, he said if you don't return to work, quote unquote, you can pretend to work from home elsewhere. So I don't know if I agree with him. I don't know. I find myself to be a little bit more productive if I have, a hybrid type work environment. But then again, I think I'm a little bit more personally responsible than maybe some of my previous coworkers. Who knows? Jewel Morris says, Tom, I worked from home as many folks did in the 90s, 2000s at PepsiCo. Wow. So what are your thoughts on it then? Thumbs up, thumbs down? Do you want to be remote? What do you think? Austin City Limits is here. Hey, Austin City Limits. Hopefully you had a great 4th of July weekend. XOXX Bob is here. Welcome, Bob. Jonathan France, because that more of a call center. This is Jonathan France. Yeah, so it wasn't like a call center. So this is like you're selling enterprise level, software, telecom to, large organizations. So a little bit different. JF says year 9 of working remote, not returning to an office. Interesting. So JF, if you don't mind us asking, what kind of line of work are you in? Are you software engineering? Are you client facing? Are you in sales? Or sort of maybe you want to give a little bit more clarity on that? If you want, you don't have to. Hey, Sunshine After Rain is here. Welcome, Sunshine After Rain. Good to see you. Slara 305 says millennial white collar workers are done with micromanaging. I constantly hire from JP Morgan because people are leaving in droves. Wow. That's a really good piece of data right there. So Slara 305, thank you for that. I'm assuming you're in potentially like a recruiting role. So let's read that comment again. I think that's very important for the chat to sort of understand that. So millennial white collar workers are done with micromanaging. Quote unquote, I constantly hire from JP Morgan because people are leaving in droves. Yeah, so Slara 305, I'm not sure, man, I knew I should have put this in the Nightbot command, but there was a Business Insider article that was interviewing an anonymous JP Morgan Chase employee. Now, I shouldn't have said that they worked in investment banking because I actually don't know that. I just assume that he or she did work in the investment banking division because of just the terminology and the lingo that she was using to describe her experience at work. But in this article, it outlines a 15-year veteran at JP Morgan Chase, and she said something along the lines of they're micromanaging us so much and they're treating us like children, right? I mean, if you're a 15-year veteran, I'm assuming if you've been at the bank for 15 years, you're probably at least the VP or managing director level, right? To say, oh, you need to, swipe your key card this amount of times, or we track the amount of time that you're actually typing email to clients, or we track the amount of time you're on the phone. I get it. It sucks. And that's actually why I left my previous job. Sumbram says, hey, Walks from Wall Street, hello from India. Welcome to all of our Indian viewers. Good to see you. Welcome. I see Dwayne is here. Good to see you, Dwayne. Says, hey, Tom, I keep hearing talks about a recession coming. I've heard others say no. What do you think will happen? Yeah, so I think it's a good question, Dwayne, and we could talk about it briefly. So here's what I think. Well, I think it's July 28th Is it, everybody? And you could fact check me. I don't remember the exact date. But July 28th is, I think that's when we're going to get the Q2 GDP numbers. If anybody is in the chat and you have access to Google, could you actually quickly fact check me on that? I don't want to be giving out. I think that's the date. I think July 28th is when we will actually be getting those, the GDP printout. Now, the technical definition of a recession is 2 consecutive quarters of contraction in the economy. That's a recession. Okay, so let's just assume for a minute that come July 28th, the numbers confirm that yes, the United States is in a recession. Well, that means it's nothing new. It's nothing new, and here's the reason why. Because if the numbers come out saying that we are in a recession on July 28th, well, that means we were already in a recession. Do you get what I mean, right? Because the numbers are not a leading indicator. The numbers are a lagging indicator, right? They're not a leading indicator. They're not a coincident indicator. They're lagging, right? So these GDP numbers just confirm the economic activity that already happened in the past. So here, and there was a really good article in the Wall Street Journal. I'm going to try to copy and paste the link in the Discord if you want to check it out. But the article was really well written, and the piece essentially went something like this. They took detailed data from past recessions throughout history after World War II. So any recession after World War II, and the number one differentiating factor, like let's just assume the numbers come out on the 28th that we're in a recession. The number one differentiating factor between this recession and others is employment, right? Unemployment is at all-time record lows. And now I understand that unemployment rate is a little bit misleading, right? Because the number one thing that we talk about on the stream that you should look for is the labor force participation rate, which I understand. But if you think about job openings, right, and we're actually going to get job numbers tomorrow. The job data comes out tomorrow. I believe there are more jobs available or open positions than there are Americans looking for work. That has never happened before in a recession, right? Usually you see a huge spike in unemployment, and right now we have an unemployment rate at the lowest level it's ever been. Now, obviously, right, I think the thing that is so obvious in the room, and this is what Ray Dalio wrote in his book Principles, the unemployment rate is always at its lowest point before a recession, right? I think that would make sense, right? The economy is always rocking, quote unquote, and I think people could argue that the economy is not doing well now, but just for argument's sake, we'll say the unemployment rate is always at its lowest point before a recession. But in terms of people that have jobs or job availability, that's been the differentiating factor. So if we do get those numbers out July 28th that confirms that we are in a recession, I think it'll be maybe potentially like a stagflationary type environment where people still work. There's not going to be mass unemployment like there was during the 2008 financial crisis. In which case, if the unemployment rate is still low and people are employed and making money, I think this inflation problem will persist. But we just may have slower economic growth because of that. But then again, I don't know. There's a funny saying, there's only 2 professions that you could take and still keep your job and be wrong all the time. And number 1 is a meteorologist, right? You could forecast the weather, you could be wrong half the time and keep your job, and an economist. Economists, it's sort of just like throwing darts at a board. Elias says, how long is the recession going to last? I'm not sure. I don't really know, to be quite honest. The numbers could come out and surprise us and there is no recession. But if the numbers come out on July 28th and there is a recession, the media is going to stir the pot, right? And it's going to be big fear and pandemonium. But just think about what's happening in your everyday life, right? I'm assuming you probably still have a job based upon the employment numbers, based upon the amount of jobs that are open right now. I mean, life's going to go on. Recessions are actually necessary and normal for a functioning economy. I think this, and we talk about this all the time on the streams, the practice, I think I should say malpractice of monetary policy by the Federal Reserve to sort of play referee with the economy, I think that's not healthy, right? It's not healthy to exacerbate boom and bust cycles based upon yield curve control, right? And we're seeing yield curve control in Japan. Potentially we may get it here, but essentially anytime the markets fall under any type of pressure, since the lows of the 2008 financial crisis, the Federal Reserve has always come to the rescue, right? They drop interest rates to record lows. They start buying bonds. They buy U.S. Treasuries. They buy mortgage-backed securities to suppress rates, and that floods the economy with money. So I don't think a recession is a bad thing. It's necessary to get rid of all of the products and services or companies in the economy that are creating products and services that are not profitable, right? Capitalism works in its best way when you don't manipulate it, right? So if a business is allowed to survive when it yields negative cash flow, well, that's probably not a business that should be surviving, right? Bruce Wayne says, what about billions of dollars government spending that took us nowhere, the fiscal side? Yeah, so Bruce makes a good point. So Bruce, I think it was 3 weeks ago, I did a stream titled, is it a monetary problem or is it a fiscal problem? So Bruce, I think Bruce has one of the top comments of the night, and I'm gonna read through the comments here in a bit. But Bruce is like, hey Tom, this isn't all the Federal Reserve's fault. This isn't, Fed Chair Jerome Powell's fault. Let's stop dumping on him. Let's place some of the blame on government, right? Because we have to make two distinctions here. The monetary policy side of the house is not government. That is the Federal Reserve. They are a separate private entity from the government, right? So you have fiscal policy and monetary policy, to Bruce's point. And, during the COVID pandemic, we spent all this money, we sent people stimulus checks. So I think the irrational spending of government officials on both the Republican and the Democrat side is fueling a lot of this, not only inflation that we're having, but now, I'm just gonna get away from that. Not only the inflation that we're having, but a lot of the crazy declines in equity prices that we're having. And I think rightfully so. Sparks Carnival is like Crocs shoes was up 12.22% today. What recession? Yeah, well, Crocs is actually a very profitable company, I believe. Bruce Wayne says COVID loan scam, size is really understated. Absolutely. Yeah, a lot of those PPP loans is a huge scam. Everybody knew it was going to be a scam, by the way. But, I think it was one of those things where the government panicked and they just wanted to flood the market with money. Fresh Starts says, Tom, is COVID causing prices to go up? I think to some extent, yeah. And the reason, so let me be careful of how I phrase that. I think the reaction to COVID is causing prices to go up, if that makes sense. If we think about supply chain, right, and supply chain is playing a huge factor here in relation to inflation, and I would just like to say instability in prices. So here's what let's talk about for a minute, instability in prices. And I'm going to give you a quick example here, if I may. Let's use Walmart, let's use Target, and the big box retailers. We could even throw Macy's in there, okay? Let's use that as an example. So I think what drove up a lot of these costs was you saw a massive wave of demand during COVID when everybody was sitting inside, ordering things online, on Amazon, shopping online, Macy's.com, Walmart.com. So if you're in procurement at Walmart or Target or anything, you're just rushing to get orders and put orders in at your suppliers. And that makes it very hard to forecast demand in the future, and it makes it very, very hard to manage inventories. So what are we seeing right now? Well, what we're actually seeing right now is a record glut of inventories of products and services at Walmart, at Target, at other big box retailers that they're actually working on liquidating right now. So there's actually firms out there that their job and their whole business model is to negotiate liquidations for big box retailers and Target and Walmart. So a lot of the products and services, a lot of the outdoor patio furniture, a lot of the Christmas goods are being liquidated at fire sale prices right now. And one of the reasons for that is because the supply chain was so screwed up. There was so many orders going in all at once, and it didn't even hit the warehouses or the distribution centers of Target and Walmart in time. So they're liquidating all this stuff right now. So that leads me into my next thing. I think if you guys are looking to buy appliances right now, are looking to buy, let's say, new furniture, new outdoor patio furniture, if you look around online on like the third-party markets, right, Wayfair's is a big one. I think you're going to get this stuff over the next coming months at like 50% off, right? So if you're in the market for a nice refrigerator, if you're in the market for furniture, specifically like outdoor patio furniture, holiday stuff, if you look in the third-party markets, like discount, like big box retailers, you are going to get this stuff at fire sale prices over the next coming months. So yeah, to answer your question, I think that COVID obviously plays an impact, but I think the more so that plays an impact is people's reaction to COVID, especially in China with the zero COVID policy. Hey, Shauno is here. What's up? Ryan Royal says, yes, lots of good sales going on right now at big and small businesses. Crazy amount. Read some of the internal reporting coming out of Target and Walmart. It's insane. It's insane. Dan Zhang says, do you think a recession will affect the rental market? A lot of the one-bedroom apartments in Long Island City have passed $4,000 a month. It's so crazy here. Yeah, so Dan, one of my good buddies pays about $6,000 a month. $6,000 a month for a two-bedroom place in Long Island City. They're raising his rent about $1,000. So he's actually moving out of the city and buying a place in upstate New York, in Putnam County. Is Putnam County in New York? I don't even know. But that's where he told me he's buying the house, because the rent has gotten so crazy that he's like, I live in New York City. I love New York City, but I only go into the office 2 days a week. Why don't I just buy a house for my family and commute into the city 2 days a week? Many people are doing that. So I don't want to hear yes. I don't know. I think Deborah's like, yes, Putnam County is in New York. I'm not too familiar with the upstate locations, but supposedly Putnam County is a lot more space, a lot more land, right? So I'm assuming if you buy a single family home, you could probably get maybe like a half acre, an acre lot, something like that. Photos from around New York says, okay, Tom, Putnam is north of Westchester. So Dan, one other thing I wanted to say in relation to that, well, the blunt answer is I don't know, but here's what's interesting. And if you Google this, I believe this was an article out of the New York Times or Barron's, I forget which one I read it in, but they were interviewing some of the top brokers in the New York City rental market, and they said verbatim that a lot of the crazy activity that was going on in the sales markets in terms of bidding wars, of people offering over asking and writing personalized letters to the sellers, a lot of that stuff is now transitioning to the rental market, which is unbelievable. So people are actually bidding up the prices of the rent. So on your application, some people are like, hey, if you accept my application right now and don't consider anybody else, I'll give you $50 extra a month. And I'll front load it, and I'll give you, 6 to 8 months rent up front, something like that. So things are getting crazy. Things are getting really crazy. But yeah, I think things are gonna start to slow down. The only thing that's concerning to me in terms of the real estate market is, yes, I understand that interest rates are going up, right? I think a 30-year fixed rate mortgage is right about 5.5%. But here's something that's very interesting. And this is usually a leading indicator for housing, and it's housing starts. So last month, housing starts were actually down 14% year over year. But here's the interesting thing. Even though we're seeing a little bit of an uptick in inventory, it's not like a huge glut of supply coming onto the market all at once. So if you have just enough supply to meet all of the demand, which we don't yet have, so even if we get that supply coming onto the market, the bad news is single-family home builders are no longer building homes because it's not profitable for them. Well, at least they're starting not to build as many. You know, housing starts were down 14%. So if we don't get extra supply onto the market and we're not getting any new supply by building, well, isn't the problem just going to get a lot worse? I don't know. I could be wrong, but I hope, I mean, you guys know my stance. I hope housing prices go down, right? And this is coming from a person who just bought a house a little over a year ago now, right? I think for the greater good of the U.S. economy, if we want to talk about the health of the middle class, you know, I think Harvard Business School did a study, the largest study of millionaires in the United States, first generation. The vast majority of the Americans' net worth that are first generation millionaires, the vast majority of that net worth is actually made up in equity in a home. So if we start this shift where you have a culling of the middle class where nobody can afford home ownership, you know, you're just going to have a renter nation, which is very scary because that could turn into something like Europe. And, you know, we all know what happened in Europe. So let me check out some of the comments here. Lisa, the markets. What is one of the reasons they gave why they wanted to take their home off the market? Here, let me pull off to the side and read some comments here. Shubham is here. It says, walks on Wall Street. My one uncle is living in New Jersey and one uncle is living in Los Angeles. I think New York City is one of the most beautiful cities in the world. I never get a chance to come. Well, please come. We'd love to have you here in New York, please. Mad Max 62 Ed says, what happened to rent control? So I think the rent stabilized units in New York City, they just voted to raise the rent 3%. Is that correct? I think they just voted to raise that rent. Thoughts on Larry Kudlow? You know, there's a nickname for Larry Kudlow that I can't give on the stream. The LT Prod says, hey Tom, where I lived, people stopped selling. Oof. The ABX girls is not considered upstate. Westchester, Rockland, Dutchess, and Putnam are still considered downstate. Thank you for that, the ABX girl. Arbor Knight says, hey Tom, happy belated 4th of July. You as well, you as well. Out and About says, I am off this week. That's why I am able to watch in the chat. Hey, Out and About, what's up? Out and About is actually our moderator from Toronto, Canada. So happy belated Canada Day for all of our Canadian viewers. Dee says, I thought Kylie Jenner was the youngest billionaire. I thought so as well. Don Smith is here. Welcome, Don. Good to see you. Hey, Vinny Castellano is here. Good to see you, Vinny Castellano and Maria Castellano. Right. Fresh starts, Tom. Can we see the Empire State Building? We can. You know, I was actually in Greenpoint, Brooklyn yesterday to watch the fireworks. Unfortunately, the what's it called? The internet was no good. So I'm just I took a standalone video of the fireworks. I'm gonna upload it for everybody tomorrow. But the Empire State Building looked amazing yesterday. Cynthia Beal says, well, perhaps people will combine money and buy multifamily units. Lisa says they felt that they could not get top dollar. Ooh, that's actually a concerning comment. Davi says, I read Oppenheimer's CIO said S&P might end the year at over 5K. What do you think about that? Yeah, I mean, he is, I think he put out some crazy stuff in relation to Bitcoin as well, didn't he? he always says, oh, Bitcoin's going to trade at 200,000, and then he's like, all right, I'll trade at 18,000. Oh, maybe I'm thinking about Guggenheim, actually. I apologize. I'm thinking about Guggenheim. But here's what I think may happen. Here's what I think is a very big possibility. Right now, the bond market's actually pricing in rate cuts in 2023 by the Fed, surprisingly. So here's what I think that means. So as we've been talking about on the streams, judging based upon the fact that we are in a midterm election cycle, if we look back throughout history, during midterm election cycles, Q1 and Q2 are always horrible for stock market returns, always. But after midterms, on average, the market usually rallies about 20%, especially if we get a complete red wave in both houses of Congress. Now, I'm not getting political, I'm just telling you what the data says. The best scenario, politically for stocks, this is concrete data. So the best scenario for stocks is when you have a Democrat as president. So we got our pal Joe Biden, President Joe Biden. So we check that box. And number two is when you have both houses of Congress controlled by the Republicans. That is when you see the greatest stock market returns. So maybe Oppenheimer CIO is banking on that, in which case he may be right. Also, lastly, I'll say, we could be playing into a situation here where Fed Chair Jerome Powell is getting extremely aggressive in terms of monetary policy by raising interest rates and unwinding the balance sheet, so they can do the damage in the first and second year term of the Biden presidency, in which case, maybe at the tail end of year 3 and year 4 of Biden presidency going into the elections, they could actually start to ease up on monetary policy, in which case that is when you would really see a new bull market start. But that, again, is all speculation. But that's sort of what I'm banking on. Hey, Cosmo, what's up? Good to see you, Cosmo Scary. Hopefully you're well. Sparks Carnival says, I read the best job sectors for security during a recession are number 1, healthcare, number 2, government, 3, computers and IT, and 4, education. Do you agree? Yeah, I would throw, I think IT, so computers and IT, I think if you actually whittle that down even more, I think cybersecurity is going to be extremely not only stable in terms of job security, but extremely lucrative, especially if you are in a revenue generating position at one of those companies. Because not only are you going to have buying pressure of cybersecurity products from the private sector, you're also going to have it from state and local governments too. It's going to be an absolute necessity. So if you work in the cybersecurity industry, let's say if you're a software engineer, or let's say if you're a salesperson, I think you're going to do really well. Hey, Kathy Lyons says, hey Tom, thank you for streaming. Learning a great deal. Kathy Lyons, thank you for being here. Hopefully you're enjoying New York City. So we're walking down 42nd Street. We're going to pass the PwC, or Price Waterhouse Cooper building. Speaking of the big consulting, we actually just had EY get banged with a $100 million fine from the SEC for unethical practices. We talked about that in the last stream. Hey, Mark Francis 076. Thank you so much, Mark, for the $5 donation. You are very, very kind. Thank you for being here, and I appreciate your kindness. Justine says, hey, Tom. Hey, it is much colder than it was last year. Yeah, today, last week was pretty hot here in New York, not gonna lie. But today, I think it's about 74 degrees right now. The rain is just letting up, which is good, but I think we needed the rain because, as I was walking through Central Park the past couple days, the allergies are really getting to me. I think the very high pollen count. Hey, Marjan Worldwide says, what happened to Florida? Hopefully nothing bad. Oh, in relation to me? Yeah, I'm going to be back there next week. I'm going to be back in Florida next week. I have a wedding, everybody, to go to, so there's going to be no stream Thursday or Friday of this week. I will be out on Long Island because I have to attend a wedding. Hey, Elliott Wave Review, thank you so much for the 5 Canadian donation, my friend. Says, Tom, if you could refinance your new home right now and buy a new property with that cash, would you do it? I would not. I would not do it. So my goal with the property that I bought is once I have about 50% equity in the property, that is when I will go hunting for another deal. I tend to be more along the lines of a more risk-averse person. I don't really like to have that much leverage. I usually really don't even like to acquire assets with leverage, but in the real estate business I do. But I think I should probably have about a 50% equity build maybe in 2 years, I think. Because the plan is to make double payments on it, right? So I'm gonna have the rental income, which will exceed the mortgage and the taxes and the insurance. So the property is gonna cash flow really nicely, but I'm gonna continue to make my regular mortgage payment, assuming that I would have no rental income coming in. So I'll probably have about a 50% equity build, maybe in 2 years, 2.5. Also, I got a really low rate, right? I got a really, really low rate. I think my interest rate on the loan is like 3%. So technically it's free money, right? Considering we got a CPI print of about 8.7. So technically inflation is just eroding away the debt. So. So here we are, 42nd Street, Madison Avenue. We are overlooking the beautiful Chrysler building right now. Hey, Andre Almar, good to see you. And then here we have One Vanderbilt. But if you guys are enjoying tonight's stream, feel free to leave a like on the video and subscribe if you are new. We are right outside of the PwC building. And EY, I think, actually just had to pay a $100 million fine. So, and this is actually pretty interesting because EY is, I believe they're trying to break apart their businesses, the accounting business and the consultancy business, during a time where there's huge scandals going on within the firm. So I believe this is one of the largest fines that, one of the big accounting firms ever had to pay, $100 million. Hey, Ken Glass is here. Says, good evening, Tom. Good to see you, Ken Glass. Jose Ricardo says, I'm from Brazil. Good to see you, Jose. Joan says, hello, Tom. Good to see you. Good to see you, Joan. Hope you had a good 4th of July weekend. Back to work, back to business. I see Day's Work here. Good to see a Day's Work. Good conversation, everybody. Good conversation tonight. I wanted to run through a couple quick things. I see Talvish jumping in the chat. Good to see you, Talvish. Welcome. But let's run through a couple quick things here because I think it's going to be very important to review this. So let's talk about the major investment banks. So here's the reason why I wanted to talk about the investment banks, more specifically investment banking activity in the IPO market in terms of underwriting fees. Hold on, let's pass these garbage trucks for a minute. So right now we are standing right outside of the New York Public Library, or the Stephen Schwarzman building. And Stephen Schwarzman, very famous figure on Wall Street, made the vast majority of his money in LBOs, or leveraged buyout deals, which we'll talk about a little bit later in the stream. But tonight, if you guys remember, during the pandemic, it was an absolute gravy train for the major investment banks. Now, why would that be? Why could we say that during the pandemic, when the government printed all this money, when the Fed flooded the markets with liquidity, why would that make it an absolute heyday for the investment banks? Well, if you are familiar with how the investment bank works, a lot of the money, or a lot of the revenue generated from a traditional investment bank is through fee income. Okay, so in 2020, I would say the later half of 2020, 2021, investment banks had absolute record deal flow. Okay, so a lot of my friends who worked at the investment bank at Goldman Sachs, JP Morgan Chase, they oftentimes complained that they were working 80 to 90 hours a week just because the deal flow is so massive, right? You know, we're talking about, deal flow in the IPO space. I think it was the most amount of IPOs ever on record since the 2000 dot-com bubble. Since then, so let's just compare quarter to quarter here, year over year. So this time last year, IPO activity, or IPO revenue, slipped below $4 billion in Q2. That is down 97% from all-time record highs in Q1 of 2021. So usually in a raging bull market, when stocks are going crazy, capital is awash in the system, it is so easy for companies to pitch themselves to go public and raise money, right? So money is flowing everywhere. But when the market turns, liquidity shuts off, credit shuts off, and the IPO market dies. And this is exactly what we predicted in the Behind the Street newsletter. This is exactly what we predicted with all these SPACs, which were the special purpose acquisition companies, and that also plays into the crazy amount of fee income that these investment banks were making. If you think about, Goldman Sachs with David Solomon, their CEO, they made a killing, billions of dollars, windfall profits on these SPACs. JP Morgan Chase, Morgan Stanley, in terms of their investment banking and equity underwriting departments of these banks, made a killing. So much so that there was record bonuses in 2021 for many of the associates, managing directors at the investment banks, because the deal flow is just so crazy. So it's really bizarre. Well, I guess not bizarre. I think bizarre is the wrong word to use. But it's really interesting to see the massive shift that's happening here. So you had 1 year, it seemed like there was an IPO every day, right? And it's very easy for a company to go public during a bull market. And that's why there's an old saying on Wall Street that if you really want to find a good company, look for the companies that are going public during severe bear markets. Because if you can raise capital and you can market your IPO during a bear market, well, that means the company must be of supreme quality. It's quite the contrary during a raging bull market. Think about all the companies that went public during the pandemic, right? And when credit was awash, when things were euphoric, you had all the junk, SPACs, like, not even the SPACs, you had things like Robinhood, all these junk companies going public, and it was an absolute windfall for the investment banks. But it's crazy now, guys. I mean, IPO revenues, or IPO value, slipping below $4 billion in Q2. That is down 97% from record highs in Q1 of 2021. This brings me back to last February. I think that's when I first started streaming, and we were actually covering the earnings conference call in February. And Goldman Sachs CEO David Solomon said something along the lines of, and I'm paraphrasing here, he said, "These results are not sustainable, especially in the investment banking division, in which case revenue is down 36% at Goldman Sachs and 37% at Morgan Stanley in Q1. And if we fast forward all the way to some results I guess, some preliminary results or some whisper numbers on the street for Citigroup. They are expecting a 50 to 55% drop in Q2 investment banking revenues. So I think this is just an important thing to review. I don't really want to hammer on it too much, but just note that usually when things are good and liquidity is sloshing around, that is the time when tons of companies go public, but those are usually the junk. So I think now is the most important time, if ever, to really, really be paying attention to what companies are going public, who's IPOing right now, because during bear markets, the quality tends to go public. We have Elias says, after recession and the Ukraine war, there should be an economic improvement. Yeah, perhaps. I agree. I agree with you. Good to see you, Elias. We have Michael says, the funeral business is also good. Austin City Limits says, fuel prices are another of our inflation problems. Yeah, so we've actually seen a lot of these baskets of commodities come down quite a bit, and we've been talking about that too. So I think the record high for crude, if we look at the futures contract, ticker symbol CL, and I believe we were actually live streaming the top tick of the crude oil market. I think it was like $130 a barrel. I think we're now trading at like 106. So 130 could have been the high. Right, 130 could have been the high. We're also seeing copper come down. We're seeing, I think the bubble popped in the lumber market. So if you guys remember, like during mid 2021, there were all of those crazy articles in Barron's, the Wall Street Journal, Bloomberg about how lumber prices are up 1,000%, 2,000%. And usually when you start to see those type of articles, that sort of signals when the bubble is popped, and I think prices are down like 87% in the lumber market on the futures. Emmanuel says the car repo business is booming. Yeah, that's concerning too, Emmanuel. So I think there's going to be a huge uptick in repossessions of cars, specifically in the used car market. If we watch a lot of those delinquencies, they are starting to tick up a bit, but I don't think it's going to be like an Armageddon type deal. Because if you think about the market in relation to like the housing market, I don't think we'll see like drastic losses there. I think what's even more concerning than that, Manuel, is a lot of this LBO business or like leverage buyout underwriting or loans that a lot of these investment banks were giving to like private equity. A lot of those valuations are now crushed. So I think Goldman Sachs, I think Morgan Stanley has a lot of exposure there too. So if you look at a lot of the LBO losses or leverage buyout losses, I think a lot of that stuff is probably going to kill the investment banks a little bit. All right, team, we are now at Bryant Park, one of my favorite places in the city. We are overlooking the backside of the New York Public Library, the Stephen Schwarzman building. Funny enough, we are talking about LBOs or leverage buyouts. And that is the guy you want to talk to, Stephen Schwarzman. Made a lot of money in leverage buyouts. But the One Vanderbilt building is looking fantastic tonight. Hey, Mark Davis is our good pal from Toronto, Canada. So Mark Davis is actually our medical marijuana expert in the chat. There's a lot of good consulting work in the medicinal marijuana space, or the medical marijuana space, I should say. So good to see you, Mark. Always looking forward to hearing about your research. Mrs. Irwin is here. Says hi. Good to see you, Mrs. Irwin. Jay says the auto market is insane. Yeah, I think the supply chain crises is another, factor that went into a lot of the auto markets. I remember during Christmas time, I think I read the article like December 18th, I think it was titled. If we think about, well, I guess it's a little bit different than autos. I guess you could just call it all vehicles. But like Polaris. So Polaris is like a major manufacturer of like dirt bikes and snowmobiles, like ski-doos, those type of things. So there was such an egregious chip shortage that they were just shipping their snowmobiles, ATVs, and things like that without any of the electronics in them. because there was such a crazy amount of demand, but due to the COVID supply chain crisis and the semiconductor shortage, they were just shipping the equipment without any of the electronics in it, which was bizarre. Jewel Morris's pre-owned vehicles are grossly overpriced. Grossly overpriced, I agree. Moan is here. Hello all, good to see you. Welcome. Iowa Oak says, wonder if things got cleared up at the ports where they are shipping things. Well, I think we're going to start to see prices come down a lot. During the beginning of the stream, as we were walking past, I think it was Grand Central Station, I think the number one thing we need to look out for, especially at big box retailers, specifically like Target and Walmart, if you pay attention to what the C-suite is saying at these type of places, they are going to take crazy amount of markdowns and write-offs of a lot of their inventory, many of which hasn't even hit their distribution centers yet. There's actually there's sole business operations out there, business models run on buying I shouldn't say depressed assets, I should say unwanted inventory at a lot of these major retailers like Walmart, Target, and the like. Also in like the fashion and clothing business, you could think about one of the beneficiaries potentially is like a TJ Maxx or a Marshalls, where they buy a lot of the name brand clothing at a discount. So if you guys are in the market for new furniture for your homes, or even sort of, I would even go as far to say, let's say if you're in the market for a new dishwasher, a new refrigerator, washer dryer, I think if you wait a month or so, I'm telling you, believe me on this, you are going to get fire sale prices on a lot of that stuff, especially outdoor furniture, patio furniture, things like that. So if you have local mom and pop shops that are resellers or third-party dealers of a lot of this name brand stuff, I think you're going to get a lot of good deals coming up. All right, everybody, we are now in Bryant Park overlooking the one and only Empire State Building, which, by the way, looked fantastic for the 4th of July last night. Mark Davis is Tom. I'm just catching up. I heard that Mark Benioff was named CEO of the Year. Am I correct? I didn't hear that, but I would have probably agree with that. Dan says, hey Tom, what microphone are you using? The audio is really good for the walking stream. So I'm not sure what the exact name of the microphone is, but it is a wired microphone. And all I did is I just typed in wired mic on Amazon and I bought the first thing it recommended me. I think I spent like $12 on it. I'm going to try to find the exact make and model, and I'll maybe remember it and post it in the chat or something. But it is just a basic wired microphone off of Amazon. I think it works all right. I think the only reason why I got it is because the wind noise is pretty egregious, especially in Miami when we do the Miami streams. Hey. When we do the Miami streams. Justin says, I can tell I'm not wanted. Walks on Wall Street buys, stop effing banning me. Hey, War Walker, good to see you. Welcome, War Walker. Deborah says, Mark Benioff was named CEO of the Year by Chief Executive Officer Magazine. So by his peers, I assume. Yeah, so Mark Benioff is a great CEO. We talk about him all the time. He is the CEO and actually founder of Salesforce, which is a major enterprise software company that was really a pioneer in the SaaS space, so software as a service. So their main product is a CRM tool, which stands for Customer Relationship Management Software. Ticker symbol CRM is the stock ticker. They also just closed an acquisition of Slack, which was a formerly publicly traded company under the ticker symbol WORK. So Slack is sort of like a productivity work tool that competes with the likes of Microsoft Teams and things like that. I personally use Microsoft Teams because I believe it is free. But usually if you work at, let's say in the Fortune 500, let's say if you have a big job at a tech company or something like that, you'll probably run into like a Slack. But this building right here, the one that sort of looks a little bit unique, is the Bank of China. Bank of China right here. 007 says, Tom is of a balance, recession, bull market, school of thought. Peter Schiff is beautiful. Yeah, so Peter Schiff is going through some pretty tough times. I believe Euro Pacific Bank and Euro Pacific Capital is now shut down. And if you guys remember, I'm not sure, let me know if you remember in the comments, but about, I think it was 2 months ago, we were actually talking about an investigation that really was flying under the radar, but I've been paying close attention to it because Peter Schiff is a good guy. I pay attention to him and his work. But Peter Schiff's Euro Pacific Capital and Euro Pacific Bank is unfortunately in the middle of the largest money laundering, I would say allegations at this point, but the largest money laundering investigation in human history. And so I think a lot of the regulators, not only in the United States, but globally, especially in Australia, are really out to get them. So I think the Puerto Rican government did shut down all operations and are suspending withdrawals and deposits to Europac, Euro Pacific Bank. But maybe on tomorrow's stream, we'll go into a little bit more detail of that. But it's funny because we've been talking about it. I'm like, hey, this is not looking good for Peter Schiff. I'm not saying he did anything wrong, and I'm of actually the boat that he didn't do anything wrong. I think Peter Schiff is falsely accused of these allegations. I really do. But the bank is now closed down. Kaka Silva says, hey Tom, silly question, but how many of those people in the street really own apartments in those buildings, or they live outside? Yeah, I think it's a good question, and I would say probably less than half of them, judging based upon the fact that we're just coming off of the 4th of July weekend. I think there's a lot more tourist traffic now in New York City. So that's what I've noticed. I've noticed a lot of people speaking different languages, which is good, which probably means they're tourists. And you can kind of tell a tourist when you look at them. But I think that's going to be good for the economy locally here in New York City. More tourists coming back, more people want to visit the city. But I think very, very few, very seldom amount. So speaking of the major investment banks, here is Bank of America Tower. And speaking of CEO of the Year, right next to Bank of America is the Salesforce Tower. CEO Mark Benioff. Dutchman is here. Alfred Hinkles is enjoying from Arizona. Thank you for enjoying. I appreciate it. Photos from around New York says, I think a lot of people in Bryant Park at 10 p.m. are tourists. Yeah, anybody in Bryant Park after 10 p.m. Is either a tourist or walks on Wall Street. Brendan O'Driscoll says, hey Tom, what's your thoughts on Tesla's Optimus robot? So is that the Tesla bot? There is a guy in the chat, I think he may work for Tesla, Soho, maybe has some more insight on that, but I think that, I don't know. I think it's a little wonky. One of the things I'm really bullish on in terms of Tesla, maybe in the next 10 years, is their full autonomy in their driving. But then again, a lot of people don't understand this. When we're talking about full autonomy or full autonomous driving, even if Tesla has the best technology to do that, it's really reliant on a lot of the cellular networks. So if you think about like a Verizon, an AT&T, or T-Mobile, because if you really want full autonomy, you kind of need a true 5G network, right? Because this is when we start to talk about latency requirements. For anybody that doesn't know that sort of lingo, you really, really need extreme high throughput and low latency network in order to run a true defined autonomous driving network. I think for obvious reasons, right? You don't want cars slamming into one another, crashing in. So as of right now, even though you see all this marketing online that Verizon and T-Mobile and AT&T have true defined 5G networks, they really don't for anybody who's, who understands like spectrum and spectrum auctions and things like that. We just don't have a robust build out of a true 5G network right now. So I think you're going to see autonomous driving in some of the smaller, more modern countries first. Look at how big that rat is right there. So I think you could talk about like a Korea or something like that, because in order to have a true defined 5G network in the United States is a big country. I think it's going to be very hard to do that within the next 10 years. And that's kind of why I think Elon Musk is getting into the internet business with the Starlink, right? Could be wrong. Hey, Andy is here from South Korea. Welcome. Andy, hope you're doing well. Trust you're well there in Korea. Thank you for joining. Wendy England, good to see you. Yeah, Zebatar says that's a full meal right there. You know, some of the biggest rats that I've seen in New York City are actually not in Bryant Park. They're actually in the park adjacent the Plaza Hotel. So if you want to see some massive rat activity there, check that out. And NPC 007 says, I would be dating fashion models as I was highly connected to New York City. Interesting. Cosmo Scary, good to see you. Ryan Royal says, oh no, Mickey Mouse fell on hard times. Yeah. All right, everybody, let's get back on track. Let's walk down 6th Avenue. Let's check out the Empire State Building. You know, it's too bad they don't have the Empire State Building lit up in red, white, and blue tonight. I know it's not the 4th of July anymore, but they at least should, you know, have it up for a couple days after the 4th. Maybe we'll get lucky and see it as we walk down. Maybe it'll change, but Manuel says raining there. Yeah, it just stopped raining, I'd say about 20 minutes ago, Manuel. When we started the stream, it just finished downpouring here. But this is the main entrance to Bryant Park right here on 41st Street. Hey, Marty Lewis is here. Says hi, Tom and everybody. Marty, good to see you. Hopefully you had a good 4th of July weekend. Good long weekend. Hopefully you got some swimming in there. Bamin Ron says, good evening, guys, from Indonesia. Wow, we are at 10 a.m. here. Nice to see everybody walking around in the sites. Well, thank you for being here, and hopefully you're doing well in Indonesia. And welcome to all of our viewers from Indonesia. Wendy England says, nice plants, I agree. Jasmine says, hey Tom, did you stream last night? So I didn't stream last night. I did not stream last night because the internet was not too good. So I just filmed a standalone video and I'll upload that soon. DowJones.eth is here. Good to see you, the one and only Dow Jones. This is raining in Boston. Good to see you. Dow Jones is a good friend of the channel, also a good Twitter friend of mine. He oftentimes posts insightful things. So if you want to follow me on Twitter at Walks Wall Street, I usually tend to post additional thoughts on the market throughout the day. So if you want to connect with us there, feel free to follow at Walks Wall Street on Twitter. You know, as we talked about on tonight's stream, you know, we were talking about how the deal flow at these major investment banks are really grinding to a halt here. But I think that sort of tells one part of the story, right? So if we think about, you know, investment banking deal flow, that it's slowing down, the IPO market is dying, stock underwriting is going dormant with the total value of IPOs slipping below $4 billion in Q2. That's down about 97% from record highs. You know, if we think about M&A activity, so global M&A activity, I believe in Q1 and Q2, so the first half of the year, global merger and acquisition volumes actually topped $1 trillion. So that's actually pretty good news for the investment banks. That is pretty high on historical standards. But as we were walking past, you know, the New York Public Library, the Stephen Schwarzman building, I think it would be appropriate to talk about LBOs, or leverage buyouts. So LBO activity has fallen sharply. It's down about 20% versus the same period in 2021. If we want to talk numbers here, about $138 billion worth of LBOs were struck by private equity firms. So the theory here, and this is what I think that a lot of the investment banks are going to take a big hit on the loans that they offered in terms of these LBOs or leverage buyouts. Because valuations have come down. Valuations have come down. Deal flow is slowing. So I think you could see, losses in the billions, or at least in the hundreds of millions. And I think Goldman Sachs and Morgan Stanley are going to be the top two that will be affected. Right now we are at 39th Street, West 39th. We may cross over and walk down Broadway. I think it's a little bit better view of the Empire State Building. Yeah, photos from around New York, just 74 degrees, that's it. Kind of chilly tonight. BS8 officials is New York. Good to see you. Welcome, BS8 official. We are walking outside of the Bank of China tonight. Kaka Silva says, Tom, does New York have single family houses? We do. In many parts of the Bronx, I believe Scarsdale is a very nice neighborhood in the Bronx that is filled with single family homes. Also in parts of Queens, you could buy single family homes. Many people, and Staten Island, many people think about New York City as just Manhattan, right? There's a lot more to New York City than just Manhattan. Yeah, Cosmo Scary says lots of single family homes in Staten Island. Dow Jones says when walks Wall Street.eth. I may have to buy that. I may have to buy it. Mark Francis 076 says sell bank stocks ? Yeah, I think bank stocks are starting to roll over, right? I would say that I would sell the bank stocks that have more investment banking exposure, right? So if you think about Goldman Sachs, maybe, because this is not coming from me, right? This is coming from David Solomon himself. So if you guys remember, I remember this stream. It was February. I was freezing. I think we were right near Edelgeiz, and we were breaking down Goldman Sachs quarterly earnings report in February of 2021, or right around that time. And David Solomon even said, he's like, he told analysts on the earnings call, he's like, don't expect this massive boom in investment banking revenues to last. It's not sustainable, right? After the pandemic, I think this guy's doing pull-ups. After the pandemic, the market was awash with liquidity, right? The money printing went crazy, and the IPO markets were booming. And if you want to understand the workings of these investment banks, they make the majority of their money off of fee income, so the fees. So if they take a company public, they charge fees for that. A lot of the equity underwriting activity, they charge fees for that. So I think the one potential department within the investment bank, the sales and trading department, may do pretty good. It depends on how good their proprietary traders are, or the prop traders. Maybe they made a lot of money during this volatility, right? So usually traders tend to make a lot of money when markets are volatile, right? You need volatility to generate trading profits, all but short term, right? So if you're running like a quant strategy or something like that, you're probably doing pretty good. So coming up here in a second, you're going to see what I believe to be is one of the greatest views of the Empire State Building. One of my personal favorites, I would say. Hey, sunshine after rain. Good to see you. Sunshine is our great moderator. Has been here since day one, pretty much. Sabrina Fair, welcome. Yeah, Zebataj says Bay Ridge, Brooklyn. I think, what is that one neighborhood, maybe Cosmo or photos from around New York could help me out here. But in Queens, it's predominantly a lot of NYPD, FDNY. It's in Queens somewhere, that neighborhood. Breezy Point. Am I thinking of the right one? Maybe I'm thinking of the wrong one. But yeah, a lot of FDNY, NYPD tend to live there, I believe. Breezy Point. Yeah, Austin city limits. So you're talking about the yield curve inversion, yeah? College Point Jam? I'm not sure of College Point. Hey, SME Media, good to see you. JM, good to see you as well. Yeah, photos from around New York says lots of NYPD around there. Good to see you, SME Media. Yeah, Iowa Oaks is the neighborhood that got flooded. You know, during Hurricane Sandy, Long Beach, New York, and Island Park, as well as Oceanside, were flooded pretty badly too. You know, I would just say a lot of South Shore Long Island tends to flood pretty bad when we get the tropical storms and the hurricanes and things like that. Debris is definitely Breezy Point. Copy that. Hey, Lee. Hey, Lee, long time no see. Lee is a former New Yorker. Well, I guess once a year a New Yorker, you're always a New Yorker. But he now is down in Miami. Good to see you, Lee. .007 says, I wish I could do due diligence on Tom's full portfolio. You know, I was thinking about doing that on the desk streams. I just still got to set that up. Patricia Ivory says, Tom, Scarsdale is in Westchester County. Copy that. So what is the very nice neighborhood in the Bronx? There's a really nice neighborhood in the Bronx somewhere. I just forget the name of it. G. Shep says, hey, Tom, I have a small investment in Webull. It's not going anywhere and it's been there for a long time. What are your thoughts? Honestly, I don't really have any thoughts on that, to be very blunt with you. We don't really give out personal investment advice here. We just sort of talk about the broader markets. I can't really advise you on that. I'm not a advisor. I don't have any licenses to advise you on something like that. But my thoughts on an investing platform like Webull, I don't really think of them in a great light, let's just say. I view them the same as a lot of those like Robinhood type broker dealers that I think are a little bit disingenuous and I would say borderline unethical, I would say. I'm just not very aligned with their business practices. I think that they try to gamify investing to gambling. And that may be fun, it may be, hilarious at first, but I think that teaches very poor investing habits, because as you get older and you think about retirement, I think a lot of these people that are gambling on platforms like Robinhood and Webull are gonna regret it, because they're like, yeah, I probably shouldn't have bought the meme stocks and the Dogecoins and things like that when I was young. I probably should have just invested it well. But me personally, I run my long-short portfolio in IB, which is Interactive Brokers, and I do have a Charles Schwab account. But I think, I think that's just my view on that. Again, that's just my opinion. Doesn't mean I'm right, doesn't mean I'm wrong. I just don't think that, in terms of the ethics, I think Robinhood could improve. Riverdale, Corey, thank you, that was it. Yeah, Corey, that's what I was thinking about. I was thinking about Riverdale, you're right. Thank you for that, Corey. Yeah, Jasmine says, I think Riverdale is in the Bronx. It's a very nice neighborhood. Yeah, you're right. That's the one I was thinking of. I don't know why I said Scarsdale. I think Scarsdale is a nice neighborhood, though, but it is not in the Bronx. But thank you for that. You're right. But the Empire State Building is looking good today, everybody. If you're enjoying the stream tonight, feel free to leave a like on the video. And if you're new, feel free to click the subscribe button as we go live about 5 days per week between New York City and Miami, talking about finance. So just a quick review. We talked about the investment banking revenues falling off a cliff. We briefly talked about David Solomon. We talked about the global M&A volumes drying up. We talked about the leveraged buyout market. Now, everybody, it's time to talk about China. It's time to talk about China. So why would we want to talk about China? Well, I'll tell you. Because as we are in a bear market, as asset prices are getting clocked, getting hammered, getting pounded, whatever sort of onomatopoeia word you want to throw in there. Usually, the market leaders in the next bull cycle will bottom before the general indices do. So if we think about the S&P 500, if we think about the NASDAQ, the Dow Jones Industrial Average, before those major indices bottom, we will see leading stocks or the next true market leaders starting to bottom. Now, I think a lot of that is going to come out of China, and I really, really don't want to say that, but price action is telling me otherwise. And as you guys know, I used to have pretty sizable positions. I shouldn't say pretty sizable, but I used to have positions in Alibaba, JD, Tencent, all the high flyers. I now have sold them last year for tax loss selling. But if we look at the relative strength here, okay, and this is just a technical basis, but we're gonna talk about global macro in a minute. These stocks are leading, right? If you look at the relative strength or the relative performance of a JD and Alibaba, a Tencent, these things are breaking above their 50-day moving averages, right? They're starting to develop stage one bases. And as we've been talking about, the Wyckoff accumulation distribution patterns, usually after your markdown, which is those huge depressive selling that we saw across the Chinese names, now a lot of these are starting to form bases here. So here's why I'm a little bit concerned. I'll tell you why I'm a little bit concerned. In the United States, if you're a publicly traded company in the United States, you have very, very strict accounting principles and rules and regulations that are set by the SEC or the Securities and Exchange Commission. It's not the same ball game in China, okay? And so this is what we saw with stocks or companies like Luckin Coffee. I believe the ticker symbol was LK, where they were posting blowout numbers in terms of their revenue, in terms of their earnings. But at the end of the day, after doing extensive audits, it was found that all of those numbers were falsified and quite frankly fraudulent. And the stock went to zero overnight. So it's very hard to invest into Chinese names if they will not comply with the very strict auditing requirements of the SEC. But price action is telling us otherwise, that China could be bottoming here. Okay, so that is on a technical basis. Let's talk about on a fundamental basis. Let's talk some global macro here. Okay. So as we've been talking about in relation to the United States, the first business day of every month, the ISM, or the Institute for Supply Management, will report their PMI numbers. And in the United States, a reading over 50 signals expansion in the manufacturing sector of the economy. So why is that important? Well, 20% of gross domestic product, or GDP, in the United States is from manufacturing sectors. So the theory here is that if we have readings over 50, the manufacturing sector will be expanding, thus the economy will be expanding, thus corporate profits will be expanding, thus the S&P 500 will go up. As we've said before, that's not the entire story, because if we look back 3 months, we've gotten PMI readings of 58, 57, and now 54. So even though all of those numbers, all of those readings are over 50, what do we notice here? We notice extreme deceleration in those numbers. So the PMIs are rolling over. And this is why, if you want to do this analysis, I highly, highly recommend you build a model in Excel where you could chart the overall trajectory of the PMI numbers, and it'll show quite clearly they're rolling over. In relation to China, it's quite the contrary. Okay, it's quite the contrary. So China General Services PMI actually surged to 54.5. So China's General Services PMI surged to 54.5 in June. This is from a 41.4% reading in May. This is the highest reading since July of 2021. This blew away, totally ripped the face off of any analysts or any economists that estimated the reading would be 49.6. We got a 54.5 print out of China. So what do we notice there? So even though last month in May, or 2 months ago in May, the Chinese General Services PMI was about 41.4, which would signal contraction, we're seeing a trajectory upward. So on the back of the United States rolling over here, we're seeing quite the opposite in China, where we've actually seen PMIs probably bottom and are headed on a one-way trajectory higher. And I think this is why you're seeing a divergence here between US equities and Chinese equities. But oftentimes, you will not notice this trend if you're watching the mainstream financial channels, because if you're just watching the mainstream financial media, they're talking about the fear, they're talking about the gloom and doom, and that's why you very will seldom catch the bottom on these type of things. You need to be looking at it yourself, you need to be taking it into your own hands, and this is why you need to be watching these economic indicators. But if you want to learn a little bit more about that, I write a free investing newsletter every other Tuesday after the market closes. So if you type !news, NEWS in the chat, the Nightbot will drop the link to the Behind the Street newsletter. It's completely free. I write it every other Tuesday, so feel free to check that out in the chat. But I just wanted to bring that up because I'm seeing a lot of these Chinese stocks show relative strength here. And that is one thing to watch. So right now we are standing on the corner of 5th Avenue and 34th Street. We are actually directly under the Empire State Building, which yesterday was lit up in red, white, and blue. View is looking pretty good. Diego says, aren't you from Spain? I am not. Carrie Henry says, love your voice, Tom, but don't know what the hell you're talking about. That's okay. Carrie, good to see you. Hopefully you had a good 4th of July weekend. I see Lion Sync here. Welcome. Hey, Manny Explorers, what's up? Manny Explorers, hopefully you had a good 4th of July weekend, man. Everybody, please check out our pal Manny Explorers, fellow New York City streamer. Good to see you, dude. Thank you for joining in tonight. So I think we'll head down to 31st Street and then head over to the Moynihan train station. Dow Jones says, I have a present for you. You know what it is. Get in touch at your convenience. Please enjoy the rest of your walk. Hey, Dow Jones, thank you so much. Appreciate it. We'll connect over Twitter probably throughout the week, I assume. George says, I think there is going to be a BRIC currency unit to compete with the U.S. greenback reserve status. So let's talk about the currency market for a bit. Let's talk about the currency market for a bit, because emerging markets are getting crushed right now. And I think the main reason for that is the relative strength of the US dollar. So we always talk about, how the United States dollar is in hyperinflationary collapse, things like that. And I think in many cases you could make the argument for that, but on a relative basis, okay? So if we're talking relative strength of a currency in comparison to other global currencies out there, the US dollar is breaking to levels of the Dixie, the DXY, is breaking to levels not seen since 2016. And this is a really important trend to watch, because if you have extreme dollar strength, right? If you have extreme dollar strength, and let's say you're earning money in, let's say Japanese yen, well, your purchasing power in terms of US dollars is going to be eroding every day, right? So that's why I think Microsoft came out and warned of a profit warning, because they have a lot of profits or revenues denominated in foreign currencies. And as you have the US dollar gaining so much strength, again, on a relative basis, that could definitely impact or hurt emerging market companies. So let's say if you work in Japan, right? Hold on, let me cross the street here. Or let's just say you earn money in any other currency but US dollars, and then you want to transfer your currency over to US dollars. You're going to be working more and more for a lot less, right? So I think it's actually a pretty good time for Americans to maybe travel around the world, because your dollar, your purchasing power is probably going to go a long way. Line Sinks is another way to keep an eye on developments in China. Is don't rely for your info solely on the United States media and the net. Yeah, that's a good point. It's actually a really good point. Paul Meddy, is good to see you. Yeah, so maybe it's a good idea for some people to take a trip abroad. So this is 32nd Street, Koreatown. We are on the corner of 5th Avenue. Wow, this is a really good shot of the Empire State Building in contrast with the clouds here. Hey, Bagels and Walks says international travel is very eye-opening and perspective expanding. I agree. That's why one of my goals is to travel a lot more. The good thing about the move to Miami is it exposes me to a lot of like Latin culture that I originally would not have been exposed to. And it's helping me learn Spanish. It really is. If you go into a local shop or bizarre, everybody's positive for me to force myself to communicate and brush up on my Spanish. That's one of my biggest regrets. Oh man, that's a huge roach. That was one of my biggest regrets, I think, growing up, is not taking my Spanish classes as seriously as I should have throughout high school. Because I think if you are bilingual, I think you have a significant upper hand in terms of the business world. So I'd like to be fluent in Spanish. I'd like to be fluent. So I think the Miami move will help me with that. All right, I guess we'll rate this on a scale of 1 to 10. Everybody in the chat, I think this view of the Empire State Building is probably like a 9.3, maybe 9.3. Eyeglass Lady says learning a foreign language is good and fun. I agree. Tower, 100%. I'm just going to put you guys down for a minute. Hey, Matthew Taylor is here. This is good. What's good, Tom? Just hanging out. I had a good. I took some time off. I think last week we took a little bit of a hiatus on the stream. But everybody, if you liked what you heard tonight, and you want to stay connected on everything we talk about in terms of the financial markets, if you scan the QR code on your screen, it will bring you to the Behind the Street newsletter, which is a 100% free financial-based newsletter that I write for everybody every other Tuesday after the market closes. So we write about not only the US equity market, but emerging markets, fixed income, credit markets, real estate markets. So please feel free to join us here. If you scan the QR code, punch in your email, you will be signed up to receive all of my equity research 100% free. So join us there, and thank you for everybody that is already signed up there. I appreciate it. Yeah, Manny Explores, that's a good point. So Manny Explores says, I think I would blend in Miami pretty good since I speak Spanish. Hopefully someday I could visit there. Since I've been down there, Manny, almost everybody almost every, well, I'm not going to say almost everybody, the vast majority of people, Spanish is the first language down there. Especially down in like the Brickell. You can consider that like the financial district of Miami, so it's like a mini type of Wall Street. Not as big as here in New York, obviously, but pretty big, and a lot of the Latin American workers travel and work in the offices there. So I always hear Spanish. It's good. You know, it's definitely not, ooh, I think I just kicked that rat. Ooh, it was gross. It's definitely not comfortable speaking Spanish, but I think it's one of those things like you have to force yourself to do it. Because even though you may sound like awkward, like talking and ordering and like food and things in Spanish, I think it's one of those things you have to do, or else you're never going to learn it. I don't know, that's the way I sort of think about it. Yeah, Gregory's like, was that a rat or a dog? It could have been a mix of both, knowing New York. Hey, Miguel, this is greetings from Mexico. Welcome. Yeah, Manny Explores says that's how you learn speaking a new language, forcing yourself to practice it. That's true. Yeah, I mean, that was one of the main ways I was learning it a little bit in college. So I took a Spanish class in college, but I didn't really learn anything. But I played soccer in college, and almost everybody was from like Colombia, Puerto Rico, Argentina. So pretty much everybody spoke Spanish. So I think that was a good way for me to pick it up a little bit. Guzman says, I admire your energy for streaming after working all day. Yeah, I mean, a lot of people say that, but honestly, I think I would have less energy if I didn't stream. Because I feel if I'm cooped up in the office all day, not really doing much, well, I guess I do a lot of work, but if you're sitting at your desk on the phone, and then you just go home and sit down, maybe a little bit more fatigued. Audiobooks, podcasts, etc. I learned as well. Ryan Royal. Israel is here. Welcome. Snoopy says New York is extremely diverse, easier to pick up another language than other places. It's true and it's not true. New York is very weird place, and I think a lot of the New Yorkers that are like born and raised here, they'll sort of understand what I mean. Everybody has like their own sort of like clique here, I've noticed, right? Like the Albanians tend to hang out with the Albanian people, the Dominicans hang out with the Dominicans, the Puerto Ricans hang out with the Puerto Ricans, the Irish people, the Italians. It's not to say we don't hang out with. It's not like, I don't know. But you're right, I think the most amount of languages are spoken here, but it's hard to like do that. Mark Francis, good to see you. Back uptown. Just gotta watch out for all the traffic here. Yogi, good to see you. Yogi, long time no see. What's going on? Kilo Whiskey Juliet is here. Says, hey, Tom. Welcome. I think the last thing, everybody, on the agenda for tomorrow, we are going to hear from the Federal Reserve. So the FOMC meeting, we're going to hear the minutes from mid last month, but pretty much it's going to be a non-event, I think. You know, Fed Chair Jerome Powell was pretty clear about the trajectory of monetary policy. So at the last meeting, we did get that 75 basis point rate hike, obviously, which was the largest rate hike since 1994. So since before I was born. So this is a step to show that the Federal Reserve is taking inflation quite seriously. But as we've been talking about on the stream, potentially doing the wrong thing by tightening into the destruction in the equity markets. And economists and destruction alone will bring down inflation by itself, which I think could be an interesting possibility. I'm not sure if it'll do it totally. Inflation is to work out all these supply chain kinks, but I don't think this supply chain until China stops their 100% zero COVID policy. I just don't think that's a reality. I think we're going to have to learn to live with this thing. And if China continues to shut down factories and production and output, I think it may be a little bit difficult for supply chains to heal totally. And I think this is why we've been seeing companies like Apple with Tim Cook manufacturing away from China to other places. So we'll see. We'll see what happens. Hey, Michelle Henry is here. Good to see you. Welcome, Michelle. Hey, Western Mass Dave says, hello, Tom. A late night. Hello, my friend. Good to see you, Dave. Hope you had a good 4th of July. We were just talking about how the major investment banks, their revenues are getting crushed from the loss of the very lucrative deal flow securities. There's a lot of money floating around. So deal activity, IPO market was going crazy, big bull market. But a lot of that stuff is subsided now. And I think deal flow in terms of the IPO business is down 97%. And obviously we all know what happened to the SPACs. G. Shep, good to see you. So I'll take you guys with me. I have to head back up to about 57th Street. So I'll take you guys along for the ride. Might as well. Hey, Luna Lee says, where are you now? This is 34th Street, Herald Square. We are right outside of Macy's. And right under the Empire State Building. Yeah, Gregory's like that guy who's chilling. Yeah, unfortunately there's a lot of homeless people in the city. Israel. I see you in the chat, sitting across the street here. So the official date where we receive the GDP numbers to know if we are in a recession or not, I believe is July 28th. Now, I don't think this is going to be as important as many people think. because this isn't really a leading indicator. You know, these GDP numbers that are going to come out are really just going to give us confirmation bias of what we already knew, right? So if we get 2 consecutive quarters of contraction in the market or in GDP, well, that means we were already in a recession and living through it. But as we were talking about earlier in the stream, the thing that's different this time, right, as opposed to previous recessions, is that right now there are more jobs available in the United States than people actually looking for work. So the job market's actually relatively strong. So let's say if unfortunately you got laid off or something like that, chances are you can find another job in this market. It just is going to depend on how long. So on average, it takes a person about 6 months to find a new job when they are laid off. Now, we covered this on the stream a while ago. I think this is about 2 or 3 weeks ago, in relation to layoffs at major technology startups. And the reason why there's usually a massive wave of layoffs at tech startups or just startups in general, or companies that are just new on the market to go public and they don't have any earnings or very little earnings or sales, is because when times are good, access to capital in terms of, let's say, venture capital is very easy, right? A VC guy will write you a check, or a VC girl will write you a check all day, every day if you need it. But as the market turns down, you know, that venture capital spigot, that funding turns off. So let's say if the company is public, let's use Peloton as an example. You know, a company, high flyer, no earnings. They just had to lay off thousands of people because as their stock price goes down, they could no longer sell stock to investors to raise money to pay employees, to hire more people. So that's why you see during economic downturns, the things that get hit first are those unprofitable businesses. And this is why I always tell people, if you're just coming out of college or something like that, usually people are like, oh, I'll just take any job I can get. You kind of got to pay attention. You kind of got to pay attention because, you know, let's say if you're 21 years old coming out of college, 22 years old, you're probably not going to ask in the interview, oh, what is the balance sheet looking like? Right? I don't think probably one 20-year-old asked on the interview, hey, so how much cash reserves do you guys have? Are you guys cash flow positive? Right? You know, nobody asks those type of questions, but when you come out of college and you work at a fun place like Peloton and they're serving kombucha and everything's all rosy, but when the market turns down and these unprofitable companies get clocked, you're the first one to get laid off, right? So it's very important when you accept a job offer or when you're looking for a job, you want to make sure you're working for a company that at least is profitable or has a clear path towards profitability. But unfortunately, when people go look for a job, that's usually the last thing they think about, right? Is my company on a clear path towards profitability? But I think it's very important for you to do that. Luna Lee, I think it's near like 3.4%. So I think the unemployment rate right now is at all-time record lows. But obviously, one of the things we talk about all the time on the streams is I think is a better indicator of the health of the job market or the labor market in particular is actually that labor force participation rate. I think is a lot more, let's just say, accurate or full of an indicator to look at in my view. But you know, as the data shows, there are more jobs in America right now that are open than in fact there are people looking for a job. Sparks Carnival says, what are your tips for crafting a great elevator pitch to get yourself hired? Well, I think you just have to ask the questions that nobody else will ask, right? The vast majority of people, I mean, the bar is so low. I mean, the bar is like bottom of the barrel. So if you can just be competent and just ask the right questions and be confident, right? When I think a lot of people, when they come out of college, they're just so desperate to get any job. I would take that opposite approach. I think it's all about the way you frame it, right? You have to adjust your framing. right? Nobody wants to hire somebody that's desperate, chomping at the bit for the job. Can you bring value to the company? So if you're asking those questions, imagine you're a 21-year-old, 20-year-old walking in an interview, and you say, yeah, this all sounds great. You raised a bunch of all this VC money, that's fine. But what's your path towards profitability? They're going to be like, what? I'm like, yeah, why would I work here if there's no clear path towards profitability? Right? And that elevates your status, because you just have to ask those appropriate questions. So if you go into an interview and ask a question, sort of interviewing them, you turn the interview around on them, you're going to raise your status, right? But oftentimes what happens when you go into an interview, oftentimes when a lot of people go into an interview, they lower their status subconsciously, and I see this all the time. They say, oh, I have so much experience, I have this experience, I did this, I did that, I sold this much at this job and this job at this job. That's good to say all those things, but you should also set the expectation and set the tone in the room by saying, I spent good time to come down here. And this is just, let's say if you're interviewing at a startup, right? You should have a whole list of questions prepared for the hiring manager, for the sales manager you're going to work for. What are the profitability metrics here? So if we sell $1 million worth of product, are we still going to be cash flow negative? What is the runway here? Because I don't want to work at a company that is solely dependent on new VC money coming in, because what if we have a downturn? That means you're going to lay me off, right? So that elevates your status for one reason, like, yeah, you want this guy working at your company, because you don't want somebody to work at a company that's going to just push papers around and not drive the company forward. But when you have a team of people that are competent, that are focused on profitability, that are focused on a good customer experience, you're going to stand out like nobody else. And I can guarantee you, nobody in an interview that's getting interviewed interviews the hiring manager back, right? It's not a one-way relationship, right? If you're going to spend 2 or 3 years at a company that's going to go belly up, you just wasted your time. You're not in the business to waste your own time. You're in the business to make money, and make money for shareholders and clients and give customers a good experience. Palmetti says, you're so right, Tom. I learned that the hard way for the last company I worked for. Yeah, and I think and here's the other thing. Oops, sorry. And here's the other thing, right? If you can get a very competent answer back from your hiring manager, that's a good match, right? Because now and everybody, just so you know what we're talking about, this is like interviewing at a startup, right? Because a lot of the times when you get these job offers from a startup, they say, oh, we're VC backed and by this VC company. It's just all wordplay. It's nonsense. Anybody that knows the VC market, anybody could write a check, right? But it's, what is the path towards profitability here? And if you have a team or a hiring manager that knows those answers to those questions, they're like, yeah, we should be profitable in Q3 of 2023, and this is how we're going to do it. These are the metrics we need to hit. That's a sharp person. That's a company you want to work for, because I would say about 60% of the time, if you are entertaining a job offer at a startup, there's probably going to be some sort of equity component to that, right? Which means you have ownership in that company. So, a startup could dangle, you get 1% equity in the company, right? But that equity could be worth, F all, right? You want to make sure it's an actual good, lucrative compensation package for you. So if the company has no clear path towards profitability, I don't care if you give me the whole company. I don't care if you write me the check that says, yeah, I have the whole company. It doesn't matter. So, I don't know, that's just my opinion. If I was interviewing at a startup, you interviewing back to the manager is not only going to elevate your status and reframe the interview to increase the probability and the odds of you getting the job, but also make sure to to say, okay, if I'm entertaining, a 0.25% equity or 1% equity, well, maybe this will be worth $250,000 one day. Maybe it'll be worth $1 million. I don't know. But if the company has no money on the balance sheet, it's burning cash, and it has no clear pathway to profitability, then I tell the guy to take a walk and end the interview. Hey, Law says, good morning, sir. Good morning. Deborah, you're right. Yeah, so Deborah, you're right. I mean, you do it in like a nice way, but I think companies will appreciate if you ask those questions. Hey, Daniel G says, hey, Tom, good evening. Good evening, Daniel G. So Daniel is joining us from Buenos Aires, Argentina. Always a pleasure. I hope you had a great weekend. Yeah, and the reason why I give that advice for the startup world is a lot of the times these startup companies, they're so eager to grow that they'll hire, headhunters to recruit for them. And I'm not saying all the time, right? But there are a lot of times where there could be a little bit of over-the-top promises to make the company look so rosy. But as we've seen in this cycle, a lot of people that were working at startups lost their job. So it's just important that you have a mutual understanding of the working relationship, and you get the most accurate data of the company's financials, their path to profitability, their clear path, things like that. Yuri Vic says, Tom, I tried to interview the CEO back about why their job ad pay range was $180,000 to $290,000 a year, and they only offer $200,000 a year, and they just dropped out. Didn't want to interview further. Wow. Yeah, Scott says, Tom, if they are willing to share all that about the company, it tells you a lot about the company. Well, and I think it's also just to gauge the competency of the C-suite, right? Because oftentimes, if you're interviewing at a very, very small startup, you may be interviewing with the CEO or the CFO or like the number 3 or number 4 guy there. So if the number 3 or the number 4 guy at the startup doesn't know their numbers, right, and doesn't have a clear path to profitability, they should be enthusiastic. They should say, yeah, we're looking for a guy like you who knows the numbers, who knows our clear vision, who knows our goal. Like, that's the type of person startups are looking to hire, right? Driven on the numbers, driven on the fundamentals. Because if everybody is aligned on a common goal, you're going to be hyper focused to get there, right? But if everybody at the company is like, oh, I don't know how much revenue we produce. No, I have no idea. Like, everybody's just walking around not doing anything. The company's going to go under. It reminds me of that Carl Icahn interview. And Carl Icahn back in the day was, really big in the original corporate raiders, right? So another one of the LBO guys. And he did an interview. If you type in, Carl Icahn firing an entire floor of people, he sort of talks about this exact problem, right? Companies growing so big and hiring so many people, but nobody has the same common goal in the company. So you can hire all these people and nobody knows what they're doing. And Carl Icahn is like, I paid Deloitte, I paid McKinsey, hundreds of thousands of dollars to try to find out what all these people do. And they say, Mr. Icahn, with all due respect, we have no idea what these people do either. And that day, Carl Icahn fired like 3 floors of people in Manhattan at this company. And he said it was like they never even existed. But again, the way I talk, it's not an end-all, be-all. This is just what has worked for me. I'm not saying it's right, but I'm just sharing my ideas about how to, interview places. But I could be wrong. Who knows? Everybody has their own sort of own sort of twist on things.
All right, so right in front of us, we have Radio City Music Hall. We are on West 48th Street and Avenue of the Americas. Duke is here, Yogi is here. Hey, George says, thanks Tom for recommending investment valuation tool and techniques for determining the value of an asset by Aswad Damodaran. Great reading. Yeah, so Damodaran is considered the dean of valuation. And the reason why I oftentimes will recommend readings by Damodaran is because he's a very, very well-respected professor at New York University's Stern School of Business. So he's considered the dean of valuation. So if you want to learn like very deep securities analysis, if you want to learn how to build, discounted cash flow statements, or discounted cash flow models, I should say, I think Damodaran is a great resource. And one of the good things about him is he will actually, sometimes post some of his lectures at NYU's Stern School of Business for free on his YouTube channel. But for anybody who wants to learn, very deep-seated fundamental securities analysis, how to read, a balance sheet, the cash flow statement, things like that, I think on Amazon, if you look for Damodaran's book on valuation, I think you could buy it for like $7 used off of Amazon. I think it's a great investment. All right, so this is West 50th Street, headed northbound on 6th Avenue. Hey, Summer Williams, good to see you. Yeah, that's one of my favorite fountains in New York City. Hayo is here, good to see you. Palmetti's, welcome. Hey, Carson is here, welcome Carson, good to see you. We're coming up on the tail end of the stream here, but I think we covered a lot. I think this was a good stream. We talked about the potential bull thesis for China. The Chinese PMIs are actually perking up. A lot of the Chinese equities, or the ADRs, the American Depository Receipts, are actually leading the markets higher. Another sector too, I think that I know is been showing relative strength or outperforming is the biotech sector and the solar sector. It's going to be interesting to see how the market reacts tomorrow when we hear the minutes from the FOMC. So we'll hear from Fed Chair Jerome Powell. But I think it's going to be a non-event because we already know essentially what they're going to do, what they already did. The short term or the Fed funds rate now is, I think, 1.5 to 1 3/4%. After that 75 basis point rate hike, largest rate hike since 1994. Ming Foster is here. Welcome, Ming Foster. Thank you for the conversation. I appreciate it. Luna Lee, this is good stream, good information. The city looks really nice tonight too. I'm enjoying the walk. We had a huge break of all of this humidity. It was so humid in the city over the past couple days, so I'm glad it finally rained. To kind of clear everything out, but we're coming up on 57th Street, which is New York City's Billionaires Row, in which case we will conclude the stream. Maybe we will conclude the stream outside of the Alliance Bernstein building, a building that houses a very recognizable hedge fund called Fortress Investments. Fortress Investments, I think one of the notable, I guess you could call him alumni, is Michael Novogratz, who was at Fortress for many years, in which case broke off to found or create Galaxy Digital Assets. But if you guys enjoyed the stream tonight, feel free to drop a like on the video. If you're new here, click the subscribe button. Subscribe if you are new. And we will see you right back here tomorrow at 8:30 Eastern Standard Time, live from Midtown Manhattan. Although we may be live from Lower Manhattan tomorrow, that is going to be determined. But feel free to join us tomorrow. We'd love to have you back. Once again, I hope everybody had a great, restful 4th of July weekend for all of my American friends. Hope all of our Canadian friends had a wonderful Canada Day. So we'll end it here. I had a good time. Thanks for joining me, everybody. Out and about. Appreciate it. Photos from around New York. Thank you for being a great moderator, Cosmos Scary. And to the mighty bull, have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. If you liked the conversation tonight, if you scan the QR code on your screen, it'll bring you to the landing page of the Behind the Street newsletter, which is an absolutely free investing newsletter that I write for the group every other Tuesday after the market closes. We talk about the US equity markets, emerging markets, fixed income, and the like. So if you want to be a part of it there, please punch in your email. It is 100% free. So Sabrina Fair, thank you. Joan, out and about, Iowa Oak, appreciate it. And to the mighty bull, have a good night wherever you are, because there's always bull market somewhere. You just need to know where to look. See you, everybody.